For decades, it's been the ultimate symbol of the future, right? The flying car. But what if that future is finally actually arriving? Today, we are diving deep into the investment case for a brand new industry, one that promises to add a whole third dimension to how we travel, the air taxi market. So let's just ask the big question right up front. Are flying cars finally making that leap from the movie screen to a tangible, investable reality? The answer, according to a growing number of analysts and billions of dollars in venture capital, is a pretty resounding yes. But what does that actually look like? Okay, let's get down to it. At its heart, this isn't just about some cool new piece of tech. It's really about solving a problem that every single one of us understands on a gut level: soul-crushing traffic. This new wave of aviation, what the industry calls advanced air mobility, is all about bypassing the gridlock on the ground by opening up that unused highway right above our heads. So here's our game plan for today. We're going to look at the big promise, size up the market opportunity, meet the key players in the race, understand the massive obstacles they face, and then, finally, uncover what might be the smartest way to invest in what's looking like a new gold rush. First up, the third dimension of mobility. What is the fundamental promise here? I mean, what problem is this technology actually trying to solve? The whole value proposition really boils down to three huge benefits. First, and this is the big one, time. I want you to imagine turning a frustrating 90-minute drive into a breezy 15-minute flight. Second is sustainability. These are all-electric aircraft, so we're talking zero operational emissions. And finally, connectivity. This isn't just about faster commutes, it's about creating entirely new transport links between places that were previously a pain to get to. Okay, so the promise is pretty clear, but how big is the opportunity really? That brings us to Section 2, sizing up the new sky. And to really get a handle on the investment landscape, we first need to get the language straight. The biggest, broadest term you're going to hear is AAM, or Advanced Air Mobility. Just think of this as the entire ecosystem: the aircraft, the software, the landing pads, the whole shebang. It's a complete new air transportation system for moving both people and stuff. Now, the part that most of us picture when we hear flying car is UAM, Urban Air Mobility. This is that classic air taxi concept: small electric aircraft just hopping across cities at low altitudes to beat the traffic down below. This is going to be your airport shuttle or your crosstown commuter flight of the future. But, and this is a key insight for investors, don't overlook its cousin, RAM, or regional air mobility. This is all about connecting suburbs and more remote areas. And here's the kicker. Because you're dealing with less crowded airspace and fewer infrastructure headaches, a lot of people in the know believe RAM could actually be the more practical and maybe even profitable first step to commercialization. So who are the key players in this space? That brings us to Section 3, the race to certification. Let's meet some of the main prospectors who are digging for gold in this new sky. Here in the US, two companies have really pulled ahead of the pack. On one side, you've got Joby Aviation. They have a deep partnership with Toyota for manufacturing and a huge operational link with Delta. On the other side, there's Archer Aviation, backed by the auto giant Stellantis and holding a massive order from United Airlines. We are way past startups in a garage here. This is a battle of titans. And this race is absolutely global. Over in Europe, Germany's Lilium is developing a really unique electric jet. And in China, EHang has already hit a massive milestone. It's the first company in the world to get its autonomous passenger-carrying vehicle certified by a national regulator. That puts them years ahead in terms of real-world operational experience. All right, now it's time for a dose of reality. The path to the sky is not easy. Not at all. That brings us to Section 4, the gauntlet and the bottleneck. These are the two great obstacles that every single one of these companies must overcome. The first obstacle is what we call the regulatory gauntlet. Getting a brand new type of aircraft certified by agencies like the FAA is a brutal, multi-year, and incredibly expensive process. As you can see from these steps, it is the single biggest hurdle standing between a promising prototype and an actual flying business. The second obstacle is the technology itself, and this quote from the analysis we looked at really says it all. The battery is the bottleneck. The entire business model for electric aviation hinges on a major breakthrough in battery performance. So, here's the crucial point. The battery has to do four incredibly difficult things all at once. It needs amazing energy density for range, massive power output for that vertical takeoff, a really long cycle life, so it doesn't need to be constantly replaced, and it has to charge super fast to keep these very expensive aircraft in the air making money. It is an enormous engineering challenge. So, with all these challenges, where is the smart money going? Let's move to Section 5 and what is really the core investment thesis of this entire explainer: investing in the picks and shovels. Let's start with the obvious market, the flights themselves. Projections put the air taxi service market at around $7 billion by 2030. A respectable number for sure. But that is not the real story here. This is the real story. The forecast for the entire ecosystem that makes those flights possible is over $137 billion. That massive gap you see between those two numbers, that right there, that's the investment thesis. I mean, visually, the difference is just staggering. The flights themselves are really just the tip of the iceberg. The real money, the vast majority of the value, isn't in operating the taxis, but in building and selling everything that makes those flights possible in the first place. And if we break it down even further, it becomes crystal clear. We see that hardware, things like the airframes, the avionics, the propulsion systems, and of course the batteries, is estimated to account for a staggering 84% of the entire market's value today. The investment lesson couldn't be clearer. During a gold rush, the surest bet is often on selling the picks and shovels. And that brings us to our final section. How can you actually invest in AIM? Let's look at a tiered strategy for approaching this very high-risk but also potentially high-reward sector. For direct investment in the companies making the aircraft, you can kind of think about it in tiers. Tier 1 would be the U.S. leaders, Joby and Archer, since they're the furthest along with the FAA. Tier 2 offers some different kinds of bets, like Lilium's unique tech in Europe or EHang's first-mover advantage over in China. And then Tier 3 includes companies like Vertical and Eve, whose biggest strength is their deep backing from established aerospace giants and their huge pre-order books. So as we close this out, here's the thought I want to leave you with. In this incredible race to create a new dimension of mobility, who's going to be the ultimate winner? Is it going to be the company that builds the single best aircraft? Or will the real victors be the ones who build and control the entire ecosystem, the hardware, the software, and the infrastructure of the sky itself? The answer to that question is what will define the next transportation revolution.